Welcome to the United States Investing Championship Podcast. Hi, I'm your host, Norm Zeta. I have got a really special guest for us today. Mark Minervini knows more about the market than anyone else I know. Even more important, Mark has a better trading record than anyone else that I know. And his students consistently appear at the very top of the United States Investing Championship standings. So I think that's pretty much all you need to know. Mark's advice is golden. And wow, I'm so happy to have Mark with us on a day like today. Welcome, Mark Minervini.
What a day, huh?
What a day. And the first question, of course, is what advice would you give to traders right now?
Yeah. Well, this is something that I just spoke about recently. We had three consecutive 4.5% or greater days in a row. And going back and notwithstanding some of the days that happened in the 1920s around the Depression era, post uh, Depression, these always ended up very close to a bottom. One was the 87 crash, one was around '08, was the COVID decline. So again, I don't know if definitely the bottom's in. This was certainly a huge news driven rally, but the leaves, if you will, said that there would be a rally and that we could get at least a tradable low here. So the problem is that there's going to be still lots of volatility. This isn't over as far as volatility is concerned. So if you're trading volatility, you love this market. I hate volatility. I'm looking for the least amount of volatility. I like when the market is going up in an uptrend, what I call a lockout rally, where you're getting lots of alpha and not much volatility. I'm a low risk trader, so that volatility would whip me in and out of my positions. So it really depends on whether you're a vol trader or you're a breakout trader. This might not yet be the best market for you, and you may have to wait a little longer.
Wouldn't it be correct to say that we're in kind of an uncharted territory situation? I mean, I can't remember. I mean, you know way more about the market than I do, but I do not remember a situation where the markets were so influenced by the decisions of one person.
Yeah, I mean it's very news driven. There's been other news driven environments, and certainly, certainly this is a very news driven environment that's coming down to the decision of one person right now because it's all surrounding around tariffs. But this is definitely a short term. Um, the news that's around these tariffs is going to be a short term event. Longer term, if you think Trump's going to dig in, he's going to keep. I think today the reason the market rallied so much is because it already shows that he's backing off, and it's not something that is going to dig his not something where he's going to dig his heels in and not budge at all based on either markets or being reasonable as far as negotiating with people. Personally, I think Trump's a negotiator, and this is just starting from strength. And certainly there's room on the table, but you can't negotiate from weakness. So having a hard stance is part of starting a negotiation, and that's what's creating the uncertainty right now. The market's pricing this in.
Did you put on any trades yesterday or today?
So I was short the S&P from February 24th all the way till I believe it was March 11th, which I covered as usual. I get out of my positions very often too early, but there's a reason behind that, and it's a good reason. And today really, I think, highlights why I get out early as opposed to late. There's only two ways that you generally are going to get in and out of a trade, and that is either early or late. And certainly when you sell, you're either early or late. You very seldom get the exact right price or the high price and sell at the high. So you're either selling at the strength and maybe it goes higher, or you're selling at the weakness, and you missed a higher price. I would rather sell into strength or cover into weakness because what happens when you get out when your trade is at the highest that it's traded at, it may go higher, it may go lower, but your equity curve is at the highest that it's been. So now you're out and there's no drawdown. And that's one of the, if there's any secret to my success, it's the lack of drawdown. And that's because I'm using strength for selling into, I'm using weakness for covering into. And then I don't want to hold overnight into something like this. This could have happened on a gap in the morning, and now I get that volatility. So what I'm doing is I'm sidestepping as much volatility as I can. And although I covered early, I did sidestep this big rally. And some say, well, you could have stopped out, in the middle of the day. Well, it could have been a gap too. So I'm sidestepping that volatility by getting out when the getting's good, if you will. And that often makes you early. So I've gotten out of the market as far as being short. I don't have any longs right now. I'm in 100% cash right now, just waiting for stocks to set up that meet my criteria. But in this type of volatility, I'm not generally going to see stocks that are going to meet my criteria. It's going to have to stabilize, and then usually I get into the market after it's made its low and it's marked itself up a bit.
What has been your biggest winner this year?
I don't know. I trade so many trades that I don't really hold for big giant winners anymore. I'm more of a swing trader now. So, I mean, a great winner, that we just traded just recently was ALHC, and the reason why it was such a good trade is because we we made 25% on it during this decline over just the last couple of weeks. Yeah, so that was one that really, if you look at a chart of ALHC, it was a pretty amazing stock the way it just bucked the downtrend, and I just stayed with it because it kept holding up so well, and then finally it gapped on some news, and we just sold it.
Did you have any?
We made 25% on that in just a couple of weeks, and in this market, that was a big win.
Well, you also made money on the S&P short though too, right?
Yes, that was covered some on the first leg down and then covered the remainder. I don't know, 4 or 5 days ago. I tweeted it, so it's out there as far as the dates are concerned. I just want to say one thing too, because you mentioned in the beginning about the contest, and I don't know if people know this, but first of all, the U.S. Investing Championship goes back to the 80s, and it's one of the reasons why I even started trading stocks because I saw that David Ryan had won it 3 times in a row, and on that third time, he was in the Wall Street Journal. I don't even know if you remember them. They used to put those little like cartoon drawings of people in the Wall Street Journal, and they actually did that for the U.S. Investing Championship winners. They had him, and I think there was a couple others. And then it was also in Barron's. I remember the results would be in Barron's. It would be in the Wall Street Journal, and that really got me interested in market wizards. And Marty Schwartz had won the contest, and those guys said Moses, if you remember that name, was a little bit later. I think he was in the 90s. So that really got me interested in thinking someday I'd like to do that. I'd like to win the U.S. Investing Championship. I'd like to be one of these top traders. And I started following these, really high octane guys like Paul Tudor Jones and these great traders, and they became, my inspiration. And now, all these years later, and then 1997, I won the U.S. Investing Championship, and just recently, in 24 years later, in 21, I won it. Now my students are winning it, and my clients and members are winning it and performing great in it. So this is just like a passing of the torch, and it's really awesome. I think competition is great, and it brings out the best in people. So I'm really happy that you, after a sabbatical, you brought this back, and it seems like it's growing and it's doing great. So I'm real happy about that. I want to congratulate you on that, and also thank you.
I did give you a pretty good intro, did I not? I mean, that was pretty strong, okay?
It was pretty strong.
It was pretty strong. And I got to tell you, I am a really hard person to impress, okay? So I don't think I've been
I
that
know you are.
complimentary about anybody else ever, but okay. So
Well,
let me,
you've seen some of the best names ever that have come out. Some of them have come out of the USIC. I know that.
yeah, absolutely. So while we're on this topic, first of all, who are your market idols?
So there's a lot of them because I learn from everyone. I mean, I even learn when I teach. So I'm always learning. To this day, I'm still learning. 43 years I've been doing this, and there's not a day that goes by that I don't learn more. But if I were to pick some people that were really key for me as far as developing what I do and inspiring me, and the really coolest thing about it is some of them have become my very, very close, dear friends. One is Larry Height, who I absolutely love beyond love. Larry is just what a wonderful, awesome person, and we have become dear friends. He was a big influence to me, and he didn't even know it because I read him in Market Wizards. Paul Tudor Jones was a huge influence to me for a couple of reasons. One, because he had the 5 years of triple digit performance, and I took that as a challenge. That was my goal. My goal was to beat Paul Tudor Jones. And I did as far as percentage wise, but he did it with a lot more money. So my hat comes off to guys like him, Cohen, who these guys manage billions of dollars and manage hedge funds and organizations, and were able to scale this. The way I put my strategy together, it's very low risk, and I have a liquidity issue. People often ask, well, with your returns, you should be the richest man in the world. If there wasn't a liquidity issue, I would probably be the richest man in the world. But my strategy, I found to be really comfortable. About $50 million is what I move around in the strategy. I take sometimes $10 million positions in my own personal account, but that's a lot of money for an individual. But that's compared to an institution, that's absolutely nothing. So it really can't be scaled, and that's the issue with that. Well, Bill O'Neill, of course. Bill O'Neill was a mentor to so many people, and I met Bill early in the 80s. I got the first IBD, and of course David Ryan was with Bill, so that they're big influence. Who else? Now Stan Weinstein, really, I met Stan in 1990, in October of 1990 in New York City, and he influenced me big too. And that's why I started using a trend and trading only with the trend, was because of his trend analysis. And I actually just had dinner with him a couple of weeks ago, and we're dear friends too. Stan is just a wonderful, wonderful guy. Anybody who's ever met him will know that. He was recently at our gala, and it was really a great time. Everybody loved meeting him. So he's a legend in his own right. So yeah, I mean, those are some of the people. There's so many names, but everybody in the Market Wizards books, well, and especially in the first Market Wizards book and the second one, there's a lot of legendary traders there. They all inspired me. They all influenced me, and they all gave me the confidence that this is something that can be done, and that I could do it too if I just worked hard and followed in their footsteps.
So, how many books have you written?
I've written well, three books I've written. One is a interview book that we put out that my assistant Bob Weissman edited. So there's four books that I've done. Yeah.
And if a person were just starting out, which of your books would you recommend that they read first?
So I get this question all the time, and my answer is always the same. It doesn't matter, because if you really want to understand those books, they're very deep. They're like the O'Neill books. O'Neill's books have incredible depth, and they need to be read 20, 30, 40 times a piece before you're really, truly going to get what's in there and internalize it and even understand it. So I think my books are also very deep dives. So you got to read them 10 times, 20 times. So it doesn't matter. It matters that you read them all, and you read them again and again and again, and you internalize that information. They're very deep dives.
So, I know you get this question a lot, but what would be, say, the three most important pieces of advice you could give to the trader who's trying to come anywhere close to your knowledge and talent?
Well, yeah. Well, first of all, I mean, you really have to, if you don't love doing this, if you do it just for the money, you're probably not going to be successful. You're not going to withstand the learning curve. I often say, if 43 years have gone by and I still was a losing trader, I'd probably still be trading, because I'd still be challenged. And I never thought about quitting. I didn't make any money for 5 or 6 years, and never for a second did it dawn upon me to stop or quit, or that it wasn't going to happen. I made a full blown commitment that I was going to the end. That I was it was either succeed or die, for lack of a better explanation. But yeah, just you have to really love it, love the challenge, because the learning curve is brutal and it's long. And even when you think you've gotten it, then you hit a new cycle and you realize, your knowledge may not be and your skill may not be as good as you thought it was. And people get success very early and then they blow up. That probably the worst thing that can happen is you get early success. The best thing I think that can happen to a trader is they blow up. Hopefully, when they don't have a whole lot of money and they learn respect for the market, they learn respect for risk, and then they have a chance at making it. But I would find somebody that has proven themselves, through a lot of cycles, and really truly has proven themselves, and find someone that a style that makes sense to you. O'Neill was one of those people, for me, and then commit to that one style, and even commit to a coach or a mentor. Because if you start bouncing around and you're trying different things, you become a jack of all trades. You never get good at any one thing. So it takes time to even master one style. And you got to be patient with yourself because you're not going to be a market wizard in a year or two. It's going to take a long time, but it's well worth it, especially if you're young. If you're young and you got to put 10 years in to have something pay you for a lifetime, or maybe like me, I mean, I retired when I originally retired, I retired at 38 years old. I didn't ever have to work again, but I loved it so much, I didn't stay retired for very long. Um, and finally, you have always respect risk, and that's something that you're just going to have to learn. My words probably aren't going to do anything until you experience some pain and some losses, and then you'll know what that means.
So, when was the last year you had? When was your last losing year?
I can't remember. It's literally been that long. I had a couple, I mean, in the last maybe 10 years, I've had a couple of years where I was about flat or down 5%, single digits. But a double digit loss, I can't remember the last time I had a double digit loss or any large losses. In the last 5 or 7 years, I've had maybe 3 or 4 triple digit years. One was, I think, 70 or 80%. A couple were around flat where I just didn't do much and it was just kind of watching the market, and a couple where I just ended up breaking even because I just couldn't get any traction. But yeah, I haven't had a down year more than 1 or 2 down years in like 30 years. So that's my strength. I don't lose. I very seldom ever lose. I lose on individual trades all the time. I lose more than I win. I usually only right about 45% of the time over the long term. When things are going really well, I run at about 60, 65% batting average for very short periods. I've been 68, 70% maybe. But generally, and when things are going really bad, I'm running 20, 25%. I'm losing, 5 out of 6 trades maybe. But over the long term, maybe 40, 45% of the time I'm right. But the effects of that, of keeping the losses small and the gains relatively large, have led to very few down years and very little big drawdown. Now, once again, coming back to, if I had to do this with $3 billion, I would never be able to manage the risk that way. I mean, I'm sure I could do well, with a larger amount of money. Certainly, and this is something O'Neill used to always say, that these managers that manage these big, large sums of money, he did not believe that they had to be so diversified and be so adverse to cutting losses. He realized that, and this is a conversation I had with him in person. He said he realized that there was certainly some handcuffs with the liquidity issue, but these managers are just buying and buying and buying down, and blowing up on names, and just really just not respecting risk at all. When I was advising some of the biggest guys, so the traders at Soros were my clients. I had the biggest hedge funds in the world I was advising and consulting. And I'd go in there and I couldn't believe what some of these guys were doing. Not Soros, though. They're Druckenmiller and them guys, they were phenomenal. But some really respected big shops that were hedge funds, And later on, they had huge drawdowns, and I saw why. But when things were going great, particularly in the '90s, they were bragging about how they made all this money. And I said, well, what if things go wrong? And your analysis is wrong. Where do you get out of the trade at a loss? And it was just like silence in the room. Nobody had an answer, and I knew what that meant. And sure enough, there's I'm talking about a particular person. I'm not going to name any names, but a big time money manager who later on had a gigantic drawdown. It was like 70, 80%.
Wow.
So yeah, yeah,
So let me ask you a few more questions. Have you ever traded? I don't recommend that people trade these things, but have you ever traded futures or options?
I did. Yeah, I traded futures early on. Well, let me start off. When I first started trading, I started trading options right away, and I immediately blew up. Fortunately, at the time, I only had about $3,500 to my name that I saved. Then I saved some more money, and I had about another $3,000 or $4,000 and traded options, and I blew that up. Then I got another $3,000 or $4,000, and I put it back in the market, and I listened to a broker, a stockbroker, who told me that this drug was going to have an AIDS cure, and I bought it at like $18, and it immediately dropped to like 12. And he said, "This is a golden opportunity. You got to buy more." I said, "But I don't have any money." He said, "Well, go get some money, borrow the money, whatever you have to do. This thing's going to 1,000." And I'm like, "Oh my God, I got to go buy this. This is a new, he's telling me he knew the president and they had inside information on this, that the guy was telling him that you got to buy it, you got to buy it." So I went out and borrowed money and bought like another 4,000, and then the stock went to like two. He told me to buy more. So, and all in all, it went to zero. It went out of business. I remember when it was going across the tape at 1/16th, and I was still feeling hope. I was still feeling like, some hope because it was it was still alive. But I was so naive. It was like 1984, and I blew up and ended up losing like 10 or 12,000. And I went on margin. I got a margin call. I owed money, and so anyway, that was the turning point for me because right after that, I said, okay, I got it. This is not the way to fly here. Obviously, I'm doing something really, really wrong. And the first thing I knew that I was doing wrong was listening to somebody else who was getting a commission. So that was the end of listening to brokers. And that's when I got on to Bill O'Neill. And then David Ryan. And, David Ryan was my co-instructor at my master trader program for I think 8 years in a row. And it was really something else because the first time we did it, this is here's a guy who I was going to his workshop 25, 30 years earlier. And at the time, no one even knew Bill O'Neill. It was like 20 people in the room. It was like this little tiny workshop. And now we're doing workshops for 500 people, 1,000 people together. And David wrote the foreword to my first book, which he first said no to. He didn't want to write a forward. And then I said, well, can I send you the manuscript and just read it and just let me know what you think? He said, sure. And then he called me and said, you know what? You wrote the book that I always wanted to write. This is like O'Neill 2.0. This is really great. And I do want to write the forward. So he ended up writing it and it was wonderful. And we became another one that we became friends. I become friends with a lot of fellow market wizards and a lot of these great guys who were inspirational to me. Um, so yeah, I mean, I don't even know where this question started, but I
I
kind of
don't
go on.
either, actually. But
I had to
let
go
me
on tangents. I tend to do that.
let's move on. But so, do you? What do you think? Let me put it. Do you have any financial TV shows that you follow in any way, shape, or form?
Oh, we could talk about that because that's funny, actually. The answer is no, I don't. I try to never ever look at the financial news. But the question, what we were talking about before was, yeah, when I started and the options.
Right.
So I then really started getting into being very systematic and disciplined and start trading breakouts and cutting my losses. But I didn't do it all the time. Like I wouldn't always cut my loss. I do it and do it and do it, and then I'd have that one stock that I really love and I'd hold. And then I realized after I went back and looked at my performance, a couple of years went by and I was making a little bit of money. I had some good periods, but then I'd blow it. And it was all because I would hold stocks down. So then the rules started coming in where no more, I drew a line in the sand, no more big losses. That's it. Never again am I going to take a big loss. They're going to have to nick me to death, by a million cuts, but I'm not going to let any stock drop a large amount. And that's when everything changed. Everything changed. And from that point on, the rest was history. Um, but TV shows. So I avoid the news. And when I say news, I look at earnings and company reports and things like that. Yes, that I have all the time, that I'm always looking at. But news programs and talking heads and opinions. When I was in New York City and I was running hedge funds for a while, and I was and had the firm and had the institutional advisory, we had a rule. We called it vacuum packed research. I didn't even allow a newspaper in the building. Everything that we did had to be internally generated. There was no outside opinions that could come into the shop because it can get so emotional. Trading can get so emotional. You start watching this TV and forget it. All your rules go right out the window if you're not careful. Like with me, they can't do that to me because I'm a 43-year veteran and I'm pretty solid with all my rules and disciplines. But for the average person who's just starting this, it's going to be very difficult if you have all this noise bombarding you. That's one of the problems nowadays. Is that when I first started, there was no information. It was hard to find any good information. I was going to the libraries. I went to a public library, and that's where I read books in the stock market. And most of them were old and outdated, and were on strategies that never worked in the first place. Now you've got this amazing amounts of information but now you have information overload. You have so much information you don't know how to decipher the good from the bad, the wheat from the chaff. So now your job is to really insulate yourself from the noise and to focus on where the information is that you can count on. It's certainly not on the TV. I can assure you that. These are reporters. Reporters report, and writers write stories, and traders trade stocks. So you've got to realize that. So just today I tweeted and said I made a mistake today. I turned on the TV because I did, because it's such a news-driven environment, and the market was going so crazy. I'm just like, what's going? I want to see what's going on. I know Trump is saying something. It has to do with tariffs. I realize that. So I just wanted to see what was going on. The only time I usually put the TV on is if the market's down big and say, okay, what's going on here? Maybe the Fed is doing something, but other than that, I'm just watching, the news wire, and I've got it really keyed in on earnings and things that are more just factual data about the individual companies. So I'm very bottoms up. I try to stick, just to the stocks, and the stocks tell me everything. They tell me everything. The stocks were faltering before this decline. That's how I got out and got into mostly cash, and then got short the market. And lo and behold, oh, you timed the market so well. I didn't try to time the market. The stocks are what speak to me.
What would you be looking for to possibly reinstate your short position?
Oh, I wouldn't. I generally only short after the market's been in all-time highs for a long time, and then it's beneath the surface. You're seeing a lot of erosion and participation, and then what I usually do is I put shorts on very close to the all-time high as it first starts coming off the all-time high, and then I use the all-time high. I use the cash index and the underlying ETF. So, for instance, if I'm short the SPY, I'll the SPY and the cash index both have to make a new high, and then that would stop me out. And I'm not going to short down from that high more than 1 to 2 or 3%. So if I'm wrong, I only lose on average about 1.5%. So I can try that a number of times and get it wrong, and then when I get it right, it pays for those small losses. So after the market's down and it's rolled over like this would be the last time that I would never be looking to short here for two reasons. One, market's already come in a lot, and two, now you have lots of volatility. So I'm looking to short when there's alpha, and I'm looking for a change for when that volatility comes. I'm taking advantage of that. I don't want to be
part of the volatility where it's going all over the place. I want that. I want that alpha to turn into a decline, a sharp decline, and then when there's the back and forth, I'm long gone because, as I said before, I'm getting out. I'm covering into weakness and I'm selling into strength.
So would there be any scenario where you would put on a short position before it made a new or got close to a new high?
So let me say this. First of all, I'm the last guy. I'm the worst guy to ask about shorting because number one, even though I tend to get every now and then I get some really good shorts on the overall market. That's probably been my forte for as far as shorting the general market um, after bull markets. But if you go back, I've been doing this for 43 years now. All right, all the wealth that I've created, all the success that people have read about, 99.9% of it came from the long side. And I was even short a big position on 9/11. I was short going into 9/11 and benefited from that. It was a very weird feeling to benefit from that, I got to tell you. That's probably the only time I really felt guilty as a stock trader. But yeah, and at that time, the only group that was setting up were the defense stocks. It was really weird. The market, yeah, I mean, let's talk about an intelligence in the market. So now I short stocks from time to time, but I'm not really good at shorting because I get very little practice. When the market rolls over, I'm looking for the stocks that are the next wave of leaders. That's where I roll up my sleeves and I really start digging in and start looking at where's that money going to rotate into next. And I'm in cash and I'm doing the homework and the work to get ready for the next up leg. Because
Very
bull
interesting.
markets are bigger. Bull markets are bigger than bear markets. They last longer. And another problem with shorting nowadays, now, this is why I'll short the indexes, but individual stocks, I'm sure you're aware of this, Reddit and these rumors that happen. GameStop put Gabe Plotkin and his fund, Melvin Capital, out of business. One stock lost billions of dollars because stocks can go up 1,000%. And with the way we have social media now, and they run up these stocks, there's a lot of risk with shorting. So I stay away from the volatility. There's other reasons too. It's just more difficult. It just hasn't been necessary. The word necessary is one of my big one of the big words that I run my life by. Is it really necessary? You got to ask yourself, okay, here's where the goal I want to get to. What do I have to do to get there? What I do is I try to cut out all the things that are unnecessary and get to the fillet of life, if you will. What is the fillet here? What do I really need and really break it down to the least amount of moving parts and make it as simple as possible. And I find that's where the most power is.
Do you believe that insiders and market manipulation are taking a significant percentage out of the market?
No, I don't think there's much. I don't think the market is manipulated very much. I mean, today Trump did a tweet here today, and that was probably the biggest manipulation that's going to probably go under scrutiny of whether it was manipulation by a president or not, where a president says buy the market and then makes what would be a bullish statement later on. That was pretty wild. But look, this thing about conspiracies and that that the market's manipulated, that's all nonsense. That's just nonsense. The market's just too big. In certain instances, yes, I'm sure certain stocks can be manipulated. Certainly, very small penny stocks were manipulated quite a bit back in the day. The mafia got into the penny stock business in the 90s, and there was there's certainly pockets of manipulation, but in as a whole and the stock market as a business, that's to me that's just nonsense.
Let's talk about some more fun things. Where were you born out of curiosity?
Connecticut.
Connecticut. And
Mhm.
so you grew up where?
I grew up in New Haven area. But I moved around a lot. I was in California. I was even in Wichita, Kansas for a while. That's a whole nother story. Where I was moved around quite a bit. Was 1 year where I was in three different schools in 1 year. So I had a very rocky and very unstable and a very dysfunctional surroundings as a child.
Do you mind if I ask what your father used to do?
Well, my father he was in the restaurant business just like my grandfather. My grandfather came from Italy, from Bari, Italy, came on Ellis Island, opened a pizzeria. Um, was in New Jersey, and I went to Connecticut, opened a restaurant in Connecticut. My father later on opened a restaurant. My brother opened a restaurant. My nephew, there all whole line of pizza restaurants and Italian restaurants of the Minervini family. And I had at a very young age, when the kids were like 6 or 8 years old, they threw you in the kitchen, you're chopping garlic until your hands are burning off. And I realized this is not for me, and that it was too much work for too little money. But yeah, but my father ran the pizzeria, but he was kind of an idea guy and kind of an inventor, but he hung around with a lot of arch criminals. That back in that day, it was a lot of mafia and all these people who were just really bad influences, and for a while there were really taking me down the wrong avenue. And fortunately, I learned from negative example, learned what not to do, and was smart enough to go the other way. But yeah, it was just a very, very weird upbringing. Plus, my parents got divorced when I was 8 years old, so my father moved to California for a while, so I didn't see him for a while. And then my mother was alone, and we were very poor. There's times where she didn't have food and she would cry at night, and it was just that's what made me want to get wealthy was because I was in deep poverty as a kid and heard my mother being upset all the time about money, and I said, "This is not the way I want to live. I got to get rich. This is something that if I was wealthy, that I could take care of my mother, I can take care of my family, and I could not have these problems." So that was I got motivation from things that were negative, and it gave me positive motivation.
So, did you ever go to college?
I lectured at a lot of colleges, but I've never even seen the inside of a high school. I quit school at eighth grade.
Wow.
I played the drums, and I got a chance to make a record, and told my father, I said, I want to be a musician, and I don't need school for this. I'm already making a record with a band, and was off to a great start. Had actually a great career. Started as a drummer, and then I later on was a recording engineer, and I had a couple of recording studios, and um, was making really good money and doing really well. But I was taking that money and I was putting it into a trading account, and that's what was financing my trading. And I was losing it in the beginning. So I just kept working and kept putting money, and I was living at home with my mother at the time until I was maybe 24, I think I moved out. And that was the 6 years. From like I was 18 years old, and I started made my first trade, and then it was like 6 years later, I went on my own, and that's where started to become profitable. So yeah,
Wow.
but I dropped out of school at eighth grade.
Wow.
Yeah.
That's cool. That's cool. So, do you do anything else that's unusual besides play the drums and race cars?
I do a lot of racing cars and a lot of playing the drums. I shoot guns competitively, pistols. A lot of
Oh,
people who follow me know that, which some people would find that as strange probably, and some people would disagree with that, not like that. But I don't hunt. I just it's for sport. That takes up a lot of my time between my family and pistol competitions, which I do a lot less of now, and the racing the cars takes a lot of time. I'm actually going racing this week, and yeah, and playing the drums and those hobbies, and I play tennis. That takes up pretty much all my time, and I'm pretty much working all the time. Now, that's the main thing is I'm still trading, and I have the software company now and the Minervini Private Access, and we've got a wonderful software platform that we're actually releasing in a couple of weeks called Minervini Markets 360. So yeah, that's been taking a lot of my time.
do you want to mention anything else that you're doing before we leave that viewers might be interested in, like any upcoming seminars or anything like that?
So I mean, I'm doing the same thing that I've been doing for a long, long time. Nothing's changed. I'm doing exactly the same trading that I was trading 30 some odd 40 years ago. So that still remains the same. I get up every day and I trade it. I trade my own account. For about 15, 16 years now, I've had Minervini Private Access. We're still doing that. That's still Minervini.com, of course. The Master Trader Program has been around since 2010. It's probably one of the most successful uh, market trading workshops in the world now. That's coming up later in the year. We just announced that actually, I think today or yesterday or today, that registration's open for that, but that's not until November, of course. But we usually get people registering much earlier. Yeah, and I mean, we now do a big gala event every year where we have all our members and our clients can come to. This last year we did I was around my birthday, so we did a birthday party and we did the gala all together. It was just unbelievable. We had 1,000 people come to my birthday party, so that was unusual. So I never thought about it, but when do you ever get a chance to be on stage? I played with the band and it was really fun. It's on, obviously a lot of people will listen to this, probably saw it on Twitter and on YouTube. But when you get a chance to look out into an audience of 1,000 people and you know every one of them and they're all your friends and family in one place, like it was really surreal, and that was probably the most awesome moment of my entire life. Besides maybe my daughter being born and my wife, and that would probably be the next most awesome moment of my life, was that experience that just happened in January.
Mark, it's been wonderful talking to you. I am
Awesome.
just delighted that we had a chance to interview you today, particularly on such a volatile day, which was April 9th, correct? Today's April 9th?
Yes, it is.
Just to make sure people know when we did this interview. So, do you have
Mm-hmm.
anything else that you want to say?
I no, I don't know. I'm just here to answer your questions, and hopefully, I'm sorry that we couldn't get in maybe into more deeper stuff about the market. And I know people like tools and tips and stuff like that, but we got into
Well,
some.
would you be willing to do another one in a couple of months?
Sure, sure, of course, always.
I think that might be the way to go. And then we can, you can help me a little bit with the questions so we can cover exactly what you'd like to cover.
Yeah, or ask your viewers. I mean, they're the ones who come up with great questions.
That's a good idea.
Yep,
Fantastic.
and then you can kind of go through that list. You'll probably get thousands of questions, and but a lot of them overlap. A lot of people want to hear about the same thing, and but it's good to do an interview that's a little more about the life and times and getting into what moving average do you use. It's kind of, to me, that's kind of boring, but that's what a lot of people want to hear. But I think these interviews, when I interviewed with Jack Schwager from Market Wizards, he was kind of tired of asking the same old questions, and he was saying to me, I want to be a little more, have a book that's a little more like a read that you could read on the beach, more like a novel, or something that's you're reading about the people's lives and things like that. And then when I was answering some of the questions, he was saying, well, that's what all the wizards say. That's the same answer. So I was like, Jack, well, of course they say that. That's why they're market wizards. But that he was trying to be a little bit more on the deeper side and getting into the life and times. So I think at times that's good to hear about people, because especially when someone like myself, I'm sure I have an average IQ, and
Come
I don't
on,
have.
dude. Come on, dude. Look,
I
just
don't think I honestly God don't think I have a
oh,
super high IQ.
come on,
I
come
think I have
on.
a high EQ. I think I have a high EQ. Emotional intelligence, I think I am very high in that. But I
Okay,
think IQ, I don't think I have. I haven't
okay,
taken an IQ
okay.
test, so I
This
couldn't tell you.
this is my opinion on this, if you don't mind. By the way, we're not on the record anymore, but you can still record. But because who knows what he might say that might be genius.
You
But
could be on
okay,
the record. I'm okay.
okay,
Everything's on the record. One thing you have to learn if you do interviews, you have to remember that you're never off the record.
okay. So I don't
That's
know
what
how
that's what
much.
that's what a publicist told me 30 years
Okay,
ago.
I don't know how much you know about me, but I have met some of the smartest people in the world
I
when I was at
I know you have.
IBM.
I know you
Whatever,
have. I
whatever.
know you have.
So the market is the most challenging IQ test of all. Okay. So little
It's
Mark
certainly a test. I
Minervini,
don't know what kind of test, but it is a
well,
test
little
of
Mark
epic
Minervini,
proportion.
okay, has
Yeah,
basically outperformed. Now we agree that obviously when you're trading 20 billion, it's a different game. But
yeah,
for the venue that you are competing in, where you're basically trading as much as you can without having liquidity problems,
yeah.
I don't know anybody else. I was going to ask you, but I decided not to. Do you know anyone with a better trading record than you have? I didn't ask you that question, but I think the answer would be no,
I don't
right?
know. Yeah, I don't know. I mean, for the long term, as far as over many, many years, I don't know. With the lack of drawdown, I don't know too many people that would have a track record percentage wise as good as me for this many years. But Druckenmiller is amazing. They did 30% a year in a hedge fund in a format that managed billions of dollars, which is absolutely stupendous. So there's some great managers out there, but there's only a handful of people that can do that with that big, large sum of money. Stevie Cohen was a genius in the way he ran an organization. By the way, I don't remember if we talked about this before. We have one funny thing that in common. So you dated Joan Rivers, right?
Yes. But that was a
You-
PR stunt. That was a PR stunt.
Oh, the PR stunt. So I love Joan Rivers,
Uh,
but I was at Isle of Capri in New York City. It's on around 60th, next to
mm,
Bloomingdale's, in this restaurant that I used to go all the time. And here in comes Joan Rivers.
mm.
And at the time, I was young and good looking, and
You
at
know,
least
babe, you're still good looking.
okay.
You
Well,
are. You really
thank you,
are. You got a very
appreciate it.
pretty face, and I'm not gay.
I
Keep
think for
going.
60, I think for
You got a
60, I'm
very pretty good face, my friend. Keep going.
my my wife says I got good skin. So Joan Rivers walks in, and I'm walking out. We had just finished dinner, and I'm with a friend of mine, Mark Goldstein, and another friend of mine, Grant. And Joan Rivers goes, "Oh my God, where have you been all my life?" And comes up to me, gives me a big hug, and proposes to me.
You're serious.
I swear, she gives this big hug, and she kisses me, and she won't let me go. And
Oh my
she's going
God.
out. And yeah, so I was good. Yeah, it was awesome. But I was a huge Joan Rivers fan. Like I love Joan Rivers, and here she comes walking in. I was like starstruck, and then she grabs me and she starts hugging me. And it was amazing. It was funny.
I gotta
Um,
go, but if you have nothing else to do and you're completely drunk, you should
yeah,
you should buy my book, The Rise and Fall of Perfect 10, where I talk about
I
Joan.
have it.
Oh, you
I
have
have
it.
it.
Okay. Well, I
Of
have a
course I have
section about Joan Rivers and how I tried to sleep with her and she turned me down. And I asked her
it.
producers, they were filming, and I said, "So what part of Joan's body can I kiss?" And they said, "No part." So also, I will send you again for when you are absolutely intoxicated beyond your mind and absolutely can't see, hear, or feel. I will send you my pilot that I've just done so you can just have kind of a fun because it
Yeah,
describes true stories about what I used to do behind the scenes before I even started Perfect 10 and everything. You'll get a
yeah,
kick out of some of the stories. But I got to tell you one other thing, dude. The reason
yeah.
that Joan Rivers was in love with you, and I hope you
Why?
don't faint and just commit suicide, is you look a little like me. You look a little like me.
Well, next time now I have no hair.
No, it goes beyond that. Does he look like me? Come on. I'm talking to my guy here. Are you asleep? Does he look like me? He probably looks better than me, but I'm not. I don't necessarily have to.
That's
All right, I
funny.
got to go, Mark. I
Hey,
love you,
it's
buddy.
fun.
What?
It's been fun, and I would use this. This is
Oh,
all
you want to
good
use
stuff.
this too?
I think people would love this.
Really?
This is
With all the
real.
Joan Rivers stuff? We'll
Absolutely.
charge for it or something?
You're more than welcome
Okay,
to.
buddy.
You have my permission.
Okay, we'll use some of it maybe. Okay, I love you. I gotta go, okay? Thank you so
Okay. See
much.
you.
Let's do this again in a couple of months maybe, okay? Up to
Whenever
you.
you want. Whenever
Completely
you
up to
want,
you.
man.
Okay.